Now, our main focus point is about advisor fees. And there's different ways that you can engage with advisors, different types of advisors out there. And I think it's very important whether you are using one now, don't think you'll ever use one. I think it's very important to understand the playing field here. And I think every type of advisor is appropriate for certain people. Okay. And so I'll give you a broad overview of the types, but actually, let me do that now. So there's about 5 different ways that advisors can operate. Okay. Now, there's 2 main categories. One are fee only, and the other's fee based. So fee only, we're fee only. This is where you only receive payments from the client for their services. Don't receive any commissions, kickbacks, incentives, or anything like that. That's fee only. Fee based is your client probably pays a fee, but you also collect commissions or kickbacks of some kind. So usually, if you have a Series 7, for example, or a Series what's the other one? Another single digit one, Series 6, I think is the insurance one. Those are where you can sell commission products. You're talking about mutual funds that have loads or commissions on them. You can private investments, private REITs, private placements, things like that. And that's fee-based. The difference is typically one is a fiduciary and one isn't, which I'll get into in a little bit what fiduciary means. But ultimately, it comes down to 5 different types. One is assets under management fee. So usually a percentage, anywhere from 0.5 to 2% in total annually. That's how we operate at KPP, just that heads up. There's also your robo-advisors. Their fee is going to be a lot lower, anywhere from 0.25 to 1% annually, but you don't have the personalized guidance, okay? So you're going to pay a higher percentage to talk to a person to have personalized guidance, okay? And then there's flat fees. These generally are, can vary between 1,000, 3,000, maybe even more, depending on a complex situation. But those are kind of more set it and forget it plans. My issue with that is always most people's plans change, life changes over time. And so you might be going back to the well and paying those flat fees on a regular basis. And same with hourly, that can happen as well, where you're building a financial plan and you're doing debt management, tax strategies, Social Security, claiming strategies, estate planning, all of that. Once again, goes up with how complex the situation is. And when things change, you have to go back and pay those hourly fees. You can also have an annual retainer. Now, that's typically for those that have multi-million dollars. You're talking about, usually that's like a family office situation. They're paying 5, 10, sometimes well over that every single year for, general advice. Okay. Now, what is the average amount people pay? On a percentage basis, the average fee is 1.05%. This is coming from the wealth, state of financial planning from InvestNet, okay? And this is a study from InvestNet. The average fixed percentage fee for a human advisor, not a robo-advisor, 1.05%. 1.05%. That is average. Annual retainer, $4,500 roughly. Hourly rate, $268 per hour, and a per plan fee. There's building a financial plan, and give it to that client, and you don't talk to them again. That's about $2,500. So those are the average cost there. Now, how do you evaluate an advisor? First is obviously checking credentials. Do they have a CFP, CFA, Series 65, Series 7? What are their designations? Okay. And then what is their experience? How long they've been doing it? And are their expertise aligned with yours? Right? So, for example, we tend to be more value investors. We tend to focus on companies that have good cash flow, good balance sheets, great business longer term, etc., trading at reasonable valuations. If a client comes to us and says, I want you to buy, all tech stocks, that's probably not a good fit for us, right? So it just depends on how you would like to invest, how you would like to, what areas you need help with. Is it tax? Is it just building a plan? Is it something around your business planning, etc.? And then understand the fee structure. I kind of laid out what those are for you, but make sure that that is aligned. Make sure that their incentives are aligned. One of the issues I have with kind of the big brokers that have Series 7, that have insurance licenses, and the collecting commissions is you never know what hat they're wearing. You never know if they're wearing their commission hat or their advisor hat. And that goes to fiduciary status. Are they a fiduciary? When an advisor has a Series 7, has an insurance license, can do all these other things, and it sounds great. Problem is that you never know what hat they're wearing. Are they wearing the fiduciary hat as a registered investment advisor like us? We have a Series 65. Are they wearing that hat, or are they wearing the broker hat where they're collecting commissions and they're under a different standard that is not a fiduciary standard? Okay. So that's the big question. Are they fee-based or are they fee-only? I would recommend fee-only. Then designations, you have CFP, you have CHFC, which is the Chartered Financial Consultant. CFP is Certified Financial Planner, Chartered Financial Analyst, and then there's Certified Investment Counselor, and then there's the Registered Investment Advisor. I would say the easiest is CFP. They're not giving you ongoing investment advice. They're just telling you here's your allocation, and this is how you should have your allocation. And then they'll send you to a CPA for your taxes and a trust attorney for your trust, and build a plan for you. And that's kind of it, right? They're not doing the investments. They're just building a plan mainly. And then from there, you get more and more sophisticated in the training when it comes to the investment side. Okay. So that is an overview of my space, my area. And once again, whether you're using a advisor or not, this is an area that at some point in your life, you probably will want to engage with one. May not seem like that now, especially if your situation's relatively simple. You have a job, maybe you have a house, maybe you have just a spouse, no kids. Maybe you have kids. But either way, it is a simple setup. Still, over time, your life will get more complex financially, and you will probably need to engage with one. So hopefully it gave you a good overview of how to think about if you are going to hire a financial advisor.